Rahim. Bismillah ar-Rahman ar-Rahim. Good morning or good afternoon, everyone. Welcome to another session that is being provided to you by Shumul along the line of different topics that we're discussing today. We have a very interesting and important topic that I think is relevant to everyone that we need to get some more information and some more understanding of, because it's something that worries a lot of different people. The topic of today is fraud. Specifically, we're going to be talking about how we tackle fraud in digital financial services. And we're going to share a global perspective. Our speakers will share a global perspective of the best practices that organizations can adopt so they can basically tackle fraud. One thing to start with is basically to get everyone warmed up to the session is recently, as we know, many banking institutions in Sudan have been introducing new online payment tools or solutions, namely Visa and MasterCard. With that, this is going to provide a big shift in consumer behavior. So everyone or many people and more increasing numbers are going to want to convert that solution into their use. And because there are a few trends that are happening and changes that are happening in the country, but also in the region and globally, with digital payments, with mobile shopping and online trade, inevitably there is also going to be an increase in fraud activities. And because of the consumer behavior that is changing, there's going to be basically a behavior that is more digital, a behavior that is more mobile, and a behavior that has more fraud, unfortunately. Globally, there's always an increase in fraud cases that happen almost every year. There was an increase generally from 2020 to 2021 and from 2019 to 2020 of almost 40+%. Most of the mobile transactions, actually over 60% of those transactions, of those cases of fraud have been on mobile transactions. There's issues obviously with identity. There's issues with accessibility to consumer data. There are issues with the speed at which hackers are functioning and the tools that they have at their disposal. And because the world trade in the digital era depends primarily on trust, then there's going to be a need for organizations and individuals to basically be more aware of the different facts and issues that will be facing them as they get engaged in digital trade. Certainly because digital trade knows no boundaries, so you have to deal with people and organizations and websites and offers that are coming from different countries for people that you don't actually have a relationship with, and so on and so forth. So lots of information, lots of points of discussion to be shared during this session. I'd like to welcome our two speakers that will be participating in this discussion today. I'll start with, and I'll allow them to introduce themselves because they know best how to present themselves. So we are joined today by Kennedy and Munir. Kennedy is a regulatory and policy expert, and Munir is an expert in mobile money and basically digital financial services. So we'll start with you, Kennedy, if you can please introduce yourself to the group.
So thank you for that introduction. So as Mohammed says, my name is Kennedy Kipkemboi. I'm a senior regulatory specialist working with the GSMA within the mobile money team. And in my work, I support our members who are mostly mobile money operators to be able to unlock regulatory opportunities in different countries globally. I actively engage central bankers on a day-to-day basis, and really excited to be here to also hear what's happening in Sudan, even as I share some of the global best practices that I've witnessed over time. Thank you very much.
Thank you, Kennedy. And without further ado, so Munir, if you can introduce yourself and go ahead after that, and we can get started with the session, please, as our first speaker.
Thank you, Muhammad, and welcome everybody to this webinar. I'm excited to be here. My name is Munir Bello. I'm a payment expert. I work in the digital financial services and financial inclusion space. For over a decade, I've been involved in the initiation and launching and scaling of a mobile money service in Nigeria. And I've also worked with the Industry Association of Mobile Network Operators, the GSMA, as a mobile money certification technical lead. And also I work in Sudan with the United Nations World Food Programme as a payment expert for the Sudan Family Support Program, the Thamarat. Helping the Sudanese government cash transfer to the people of Sudan. I'm currently calling in from Nigeria for this webinar today. Like I said, I'm excited to be here to share with you on the best practices that we've seen over the years in the work that we do, that organizations and regulators as well put in place for tackling this ever important topic of fraud. So if I may, I would like to share my screen for a couple of slides that will take us through the presentation. Yeah, so we are here to discuss on digital financial services fraud and what are the best practices. But to kind of set the scene, I mean, globally, of recent and also over the years, fraud has been featuring in the news. And this is some snippets of the news that we've seen in terms of digital financial services fraud. If we start with as recent as 2019, the Vice President of Nigeria, Professor Yemi Osinbajo, declared that Nigeria's loss to DFS fraud has hit over 197 billion. At that time, that's almost $500 million USD, which is an enormous amount. But also, Safaricom in Kenya could see that in 2018 declared that they've lost over 20 million shillings to fraudsters, as well as in Ghana. We've seen that mobile money fraud especially is on the rise, and lots of victims are coming forward and sharing their stories. But it's the same with also in Zambia, where the information and communications technology said that it has been receiving so many complaints from local mobile money subscribers regarding theft from their accounts. So there's a warning there. But also back to Nigeria, and if you know Nigeria, you will see that the business of POS has been enormous. It's scaling up pretty much every corner that you move in. There's a POS that hardly people even don't use other digital channels like ATM or bank branches to carry out transactions. But as recent as last month, there's a concern that there's a mounting rise of POS fraud. And also Interpol of recent released a report about how criminals are infiltrating Africa's booming mobile money industry. And it's a detailed report that I would recommend all of us to have a look and distill that report. But having said that, it's not just Africa. I mean, it's all over India, the US, everywhere. You could see the rise in this fraud, and especially in digital financial services. But the first question that I would like to ask is, what is this fraud? And sorry, what is this fraud? And the GSMA, like I said, the Industry Association of Mobile Network Operators, defined fraud as a person or entity that dishonestly making a false representation by abusing his position or the technology with the intent to financially gain or cause loss to another person or entity, right? But fraud, not only, as you could see, it said with an intent to financially gain or for that person or to cause loss to another person or entity. But also, I would like to add that it's not only about resulting in financial loss to customers, or like we are talking about the digital financial service providers, but it also damages the reputation of the service to the customer and others, but also risks the reputation of the industry as a whole. And that's what we've been seeing in terms of our industry, in terms of the digital financial services, that once these activities do happen, there's the concern about the industry as a whole and the trust in the industry. But the question that you might also ask is, why do fraudsters, as we call them, what influenced them to go about this carrying out this fraud? And there's an interesting triangle by a criminologist called Donald Cressy that explored the factors or the reasoning that cause someone to commit a fraud. And it's also a useful framework for organizations, to analyze the vulnerability of fraud and also unethical behavior. It consists of three components, as you will see. One is pressure, then opportunity and rationalization. And together, these three components leads to what leads to fraudulent behavior. And the first leg is the pressure, which is defined as the financial or emotional force pushing somebody towards fraud, aka the motivation for somebody to commit fraud. And examples of this could be somebody, he has inability to pay his bills, or his desire for some status symbols like a bigger house or a car, or even a drug or gambling addiction. Those are kind of pressures or motivators that make somebody to commit fraud. And the second leg of the fraud triangle is the opportunity, defined as the ability to execute the plan without being caught, or the method that has been used to commit this crime, and the belief that they will not be caught. And mostly here, this is where we talk about an organization and the processes and the systems that have they put in place in order to mitigate this activity of fraud. The weaker the systems that you have, the opportunity that you've given fraudsters to kind of commit fraud using your system. And then the third one is rationalization. Majority of these fraudsters, they tend to justify the crime to themselves in a way that would make it an acceptable fact. So personal justification, of this honest action. And having the convincing reasons to commit this fraud, and examples could be, I was only borrowing the money, I'm entitled to the money, sense of entitlement, or they are stealing in order to provide for their families. So once all these three triangle, these three legs come into being, that's where fraud takes place by these providers. But as we talk about fraud, in generally, and we know that there are so many different kind of frauds that we talk about. There's the advance fee fraud, there's the business compromise email frauds that we've seen. There's so many different types of fraud. But today we are talking about fraud in digital financial services, And the challenge over the years that we've seen in terms of consumer protection, such as fraud that we're talking about today, data privacy, these are the kind of things that kind of hinder the takeoff of digital financial services. One of the first things that a regulator would want to see addressed before granting any form of digital financial services license to a provider is how well will they protect customers' funds that are held within these systems. And over the years, with the increased adoption of electronic transactions now, I mean, everything is more in terms of electronic transactions. We have the ATMs, we have the mobile in terms of USSD, we have the e-commerce channels, we have the web, we have internet banking, and more people are using electronic transactions for payment. Fraud has certainly increased, and this with data shown, especially in mobile payments. Just for an example, in my own country, in Nigeria, data shows that, and there's a need to segment this data to see which channels or which digital financial services, is more susceptible or records the more fraud over a period of time. And in 2017, we had more of an ATM fraud than any other channels, but that has been beaten up of recent by mobile channels, USSD and the likes. And certainly that has been the trend over the years. So the point is, as more people adopt electronic payments, digital financial services, the rate of fraud is increasing. And this is a major issue in several key markets, for both consumers, agents, and also for DFS providers. And while it's not, if I may say, possible to entirely remove fraud from any digital financial services, there are steps that providers and regulators alike can take to reduce this vulnerability to this fraud. And this is what we are going to talk about. What are the best practices? What is being needed, by providers to put in order to mitigate and reduce this vulnerability of this fraud. But at the same time, there's the overall impact of this fraud on financial inclusion. And we know that digital financial services is arguably the most significant contributor to increased financial inclusion that we've seen, certainly in emerging markets like ours. It has helped and accelerated the access to cheap and reliable financial services. So many people that were formerly unbanked and on the bank now have access to finance and financial products, be it savings, be it credit, be it insurance, and the like. Therefore, we can see that the impact of this digital financial services fraud on financial inclusion is enormous, right? And it's cut across all the stakeholders. I mean, for regulators, the impact is that they may be less inclined to allow the needed space for innovation to expand and diversify MFS, as they view the providers, certainly their internal controls, as inadequate to detect and mitigate this fraud. And once regulators, are not much inclined to allow for innovation, then there's a slow in bringing on products to market. There's a slow in, getting this product. For the providers themselves, it causes reputational damage, and this certainly affects them to get in new customers and new businesses, and also retain their existing customers, because there's the fear that this is not a trustworthy business or product. And then they themselves, there's the fear of developing innovative products. And all of this results in their loss of revenue, investors' funds, there's a reduce of agent investment and interest. And for the economy, once this happens and, the trust is not there, for this digital financial services, people tend not to subscribe, and then you tend to have high financial exclusion rates, and and increase the level of informal financial activity, because people now don't want to use this formal licensed, if you like, digital financial services, and a lot of activities, financial activities, would be carried out outside the system. And then also finally on the customers, as users of digital financial services, once fraud happens, you tend to lose your income, savings, and investment. And your level of trust on the system, reduces or being eroded, and then you don't kind of use the system, and the uptake of new systems is not there. And this certainly brings in also change in financial behavior, with the loss of interest in this formal digital financial services. But to touch a bit about the different types of frauds that occur in DFS, we have enormous different types of frauds, but I wanted to just quickly touch about a bit, and some that we've seen that are more prevalent across our countries or emerging markets. One that you've certainly been aware or come across is the SMS scams, where this fraudster sends in unsolicited SMS messages to providers, to subscribers, asking them, of their PIN or whatever, or send in money to them, using SMS messages. Then also we have the phishing, which is tricking users to reveal their personal information, such as their PINs, passwords, over the phone. I mean, people would call you and say they are calling from your DFS provider, and they are upgrading their system, and they need to confirm your information, and all that, and they will ask for your PIN and or password, and that will give them access to your account. Also, there's the network downtime, delays occurring from the service delivery also create opportunities for fraud. Also, agent-related fraud, agents do split transactions, they overcharging, they create fake accounts, they impersonate others. All these are fraud activities that do happen. And then there's the SIM swap, which centers around exploring the mobile network operator's ability to seamlessly port a SIM from a phone number to a new SIM, and there's the question about all the controls that needs to be put in place to tighten in that, so that it wouldn't be easy for people to kind of swap SIM or port in SIMs to another provider. And malware that they used to send in to customers' phone with a virus, and that can identify passwords, PINs, and what have you. And sometimes even these malwares, they've been used to intercept phone transfers and kind of reroute them. We have data and identity theft, which is also very prevalent if the financial data is not secured and the access to it is not protected. And there's also the fake and non-existent users, creation of fake and non-existent users on the digital financial services system. And this is mostly done by internal staff, that they create dummy non-existent users, and they can use it to be perpetrating fraud. So these are the kind of the most prevalent that you've seen over the years, and many more out there. But the question now to this is that how would providers, and I said regulators alike, even though, like we said earlier on, we can't possibly remove entirely fraud from the service, but what are the steps that we can take to reduce the vulnerability to this common types of frauds that I've shown you? So there are several steps that can be taken, to be honest. They involve improving on your internal controls, building agent network capacity to protect themselves and the customers, revisiting procedures such as account access and SIM swaps that we've talked about. But as the market also grows, the type of fraud evolves, right? And which means that you need to put in monitoring mechanisms to check in, every transaction, and, also customer feedback channels to hear directly from customers would help also in mitigating this fraud. But remember, like I said, these frauds include customer frauds, agent frauds, and also internal fraud where employees perpetrate this fraud by themselves within the systems. Because we tend to forget, mostly when we talk about fraud, we tend to kind of think mostly about fraud, like, from the customers end, but there are lots of frauds that happen also internally within the DFS systems. So one of the global best practices that are put in place, and which is a very good starting point, is on fraud management policy. So they need to establish a fraud management policy that defines the approach to anticipating, monitoring, assessing, and managing and controlling fraud. This fraud management policy, as documented and approved, should, one, design the implementation of the transaction monitoring system. It should provide policies governing employees, agents, customers, and also third parties to reduce opportunities for fraud, and also how to communicate with law enforcement agencies like the police and what have you, and other statutory regulatory bodies like the communications that like the National Identity Management Commission and what have you in country, but also how to communicate with other law enforcement agencies across borders. Another thing is also agent anti-fraud training, both for staff and agents on anti-fraud, and also AML CFT procedures. This should include awareness to common fraud. What are the common frauds that are happening within the system and also within the country, including the risks, agent risk, providers risks, customers risks. Specific processes need to be designed to counter fraud and how to report suspicious activities if staff and agents were able to detect fraud. What are the reports that they need to do to report that fraud? Also, another best practice is the notification of activities. So the ability to send notifications to customers and agents whenever activity occurs on their account, so that they can verify it. For example, or it should include success or failure of all transactions, change of security credentials, for example, PIN replacement, somebody, changes his PIN, change in personal information, whether your date of birth or your name, transaction confirmation messages, to be sent both to the customer and also to the agent when there's like a cash in or cash out of transactions, so that at least if there's any activity that did happen on the account, by the for the customer account or the agent account, the owner should be able to see and verify that by receiving this notification. Secure change of credentials. So there's a need to implement controls on SIM swap chain as well as PIN chain. We talk about as an example of fraud in terms of SIM swap frauds that are prevalent. So these are very, very particularly susceptible to fraud, and impersonation of fraud and employee frauds are also common. So there need to be controls implemented to protect SIM swaps against impersonation fraud. How difficult, well, not how difficult, but what are the controls put in place in order for a person that needs to swap his SIM, you know? Example is requiring the customer to present ID documentation in order for him to do the SIM swap. So like the national ID, you know, which would prevent another person from coming and doing the SIM swap on his behalf. I mean, if a person swap his SIM in one of the markets that we've seen, if you swap a SIM, then you wouldn't have access to your USSD for at least 48 hours on that new SIM. So that prevents, it's a preventive method that even if that SIM is being swapped by another person, at least within a 48 window, that original owner would be able to have made a complaint around that or get hold back of his SIM. Another is agent anti-fraud measures that needs to be put in by providers. For the agent, for example, not to provide services outside their expected geographical area of activity. And you might be thinking, why this? Because it may show example of fraudulent activity. For example, we've seen that agent SIMs have been found to be operating illegally, international money transfers or from across borders another country. There are so many countries that are within borders or landlocked areas, and they took the same agent SIM to another country, and you could see that activities have been happening there. Or in places like a prison, you know, where financial activities are not meant to take place. So another thing is to put in a measure of agent activities to be only within a geographical location. And then there's also sanctions for these agents, merchants, or businesses that are found to be in breach of processes or involved in fraud. And then there's information sharing. You know, they need to set up an information sharing process or forum to enable digital financial service providers share information about known fraud and countermeasures within them. Where possible, they can share details of agent businesses and merchants that have been found to engage in fraud, so that at least they wouldn't be jumping from one DFS provider to another DFS provider. Software to monitor transactions. We did touch about this earlier on. They need, as it matures, they need to deploy a transaction monitoring system that would automatically identify suspicious transactions and patterns for anti-fraud activities, as well as even anti-money laundering and CFT activities. You configure a pattern, set a pattern, you know, that would highlight that the system should be able to identify based on this set of rules that you've put in. And then it can send alert, and then the follow-up can be made. There's the protection of risk accounts and transactions. At-risk accounts are certain types of account that has been targeted over the years by fraudsters, both internally and external fraudsters. And there needs to be measures put in place to protect these accounts, you know, like a provider's airtime collection account, like a high value account such as business accounts. There are some accounts like that, we call them like an abandoned account, like customer forgets about the account or customer dies and what have you. You know, you'll find that internal staff can target those accounts. So there needs to be controls in the change and wanting to change happen there. And there's the risk-based KYC and transaction limits that needs to be also put in place in terms of screening of customers. You know, the more you know your customer, then the more that you allow the customer to do higher transactions within the system. And then finally, I also wanted to touch about the regulators and what the regulators need to put in place, because it also all starts from there. So there are three key things that regulators need to put in place in terms of helping in this mitigation of fraud. There's the regulation itself, and not just regulation, but also supervision. Then there's collaboration, championing the collaboration within the industry as a whole with all stakeholders, and then the education. Regulators need to put in stringent regulations that tackle this give loopholes to fraudulent activities, whether it be it, for example, chip and pin, two-factor authentication for transactions. So including internet-based transactions, we talk about what they need to have.
Munir, if we can try to wrap up in the next 2 to 3 minutes, would be appreciated, because we're going to be pushing against the time, please. Thank you.
Thank you, Mohammed, and I will wrap up in the next 2 minutes. Also, mobile app must not store PIN, for an example, and end-to-end encryption, and also for providers to put in industry standards like the PCI DSS that helps in data security standards. In terms of collaboration, industry-wide fraud monitoring of fraud involves various stakeholders within the industry: law enforcement agency, judiciary, telecommunication commission, and what have you. So there needs to be a sync within all this parties or stakeholders within the system. And an example is to have a fraud forum where ideas are being shared by all this and how to tackle this fraud. And there's the industry fraud desk. I did talk about it in on the global best practices for DFS providers, whereby each provider have a fraud desk within their own institution that they kind of report on fraud that did happen within their system, within also DFS providers, so that they are aware of what it is and also report on this and share this information. Training of agencies, including law enforcement agencies, training of internal staff on fraud, mass education campaign for customers, for everybody. I mean, how to secure your PIN, don't give out your PIN to other people, and the likes. Regular security tips to be sent by DFS providers to customers on these activities of fraudsters. And with that, I will leave it here and over to you, Mohammed. Thank you.
Thank you, Munir. Really appreciate the insightful discussion and presentation here. I know the topic is very deep and it requires probably more than one session and definitely a lot more time so we can get into it, but this is just touching the surface level. And hopefully in the future, we'll be able to continue down this dialogue and continue to explore deeper and further into mechanisms for tackling fraud. Kennedy, over to you after your introduction. Oh, actually, I'm sorry. Just go ahead with the presentation.
Yep. So thank you very much, Mohammed. I don't know if you can view my screen.
Yep, looking good.
Great. Thank you very
just
much.
make it full screen if you don't mind, and then we can see the slides well.
Cool. Is it full screen now?
Yes. Just go back to the first slide will be good.
All right. Thank you very much for that. And thank you also, Munir. I think Munir has shared some very valuable insights. So what I'll be able to share now is really a mobile money perspective to the conversation. As I mentioned earlier, I work with the GSMA, and this is an association of mobile money operators. And so we work closely together. And previously, I also worked with Safaricom M-Pesa. So some of my perspectives will also be based from an operator perspective. But I think it's important for us to understand the nature of transactions that occur within a mobile money ecosystem. As we all understand, or maybe those who may not understand, there's need for the money to get into the ecosystem through what we call incoming transactions. And then there's also the circulating value within the mobile money ecosystem, which is usually the P2P or, the payments, whether it be to customer to business or business to business transactions. And then, of course, at some point, the money has to get out of the ecosystem, whether it be through a cash out, at an agent outlet, airtime purchase, or international remittances. So at all these angles, fraud is a risk. So in every sphere of this, either the customer might be at risk, the mobile money provider may be at risk, or even the agent supporting the network may also be at risk. So just to put it into perspective. But I think what is important to understand is the issue of identifying customers within the ecosystem. This is very important because it is important to understand, first of all, whether you know your customer well. Customer due diligence is at the core of mobile money. And of course, the issue of anonymous accounts is something that, of course, is tackled at a KYC, from the KYC angle. And so this is very important. And I just thought it wise to just share with you some of the ways this is done for mobile money operators to be able to be aware of the customers who are using their services from a initial point of view. Of course, national IDs are important. In countries where we don't have national IDs, we have functional IDs, such as voters' IDs. And of course, in some cases, additional information may be required. This information is verified by operators. So whether it be done manually or electronically, it has to be verified against the database to really ensure that the customer really is who he claims to be. And then we also have the activation bit, of course. This is after KYC has been conducted. You may be given full functionality or limited functionality in some countries, depending on the regulations, on whether you have been able to provide all the information that is required. And then, of course, there's the monitoring and transaction monitoring, and of course, compliance reports, which have to be shared with regulators on a frequent basis, depending again on the licensing requirements. So up to that point, it is important for us to understand that customers are known through KYC within the industry. So with that understanding in mind, and I think Munir also sort of touched on this, there are normally different fraud typologies within the mobile money industry, to be specific. And like I mentioned, it could be from the agent angle, the provider, the customer being impacted, or even other more sophisticated ways. It is important to realize that mobile money in many markets is used by people who may not have bank accounts, and in many cases may not even have access to the internet. And that brings on a new wave, a new angle of fraud issues that the mobile money operators need to tackle with. I could use an example of SIM swap, and this is from an agent perspective. There are cases where we've had issues of SIM swaps being done, perhaps when a customer provides, the wrong ID, or maybe something along those lines. And in those cases, there are mitigations that are normally put in place to ensure that SIM swap frauds are mitigated, and I'll be getting into the details later. However, there are also cases where the information of the customer could have been compromised somewhere else. And we understand situations where maybe banks are integrated with mobile money providers, and to be able to, for customers to be able to enjoy mobile banking and those kinds of services. So there are cases where information may have been compromised by a third party, maybe a bank, a microfinance institution, an insurance firm, and the customer details are in the possession of somebody in that other organization, leading to compromised KYC, for instance. And this has been common, but of course, over time, the industry has been able to mitigate by ensuring that now, in terms of the safeguards that are put in place protect the customer from both angles. So that is just an example. And just to mention that, sometimes the issue might not always be with the mobile money operator or the customer himself, or even the other third party. It calls for deeper conversations. Of course, there are issues of ID theft sometimes, and those are some of the issues that we also face and also try to find mitigations for. On the provider side, there could be issues of PIN resets, misappropriation of funds. Those are some of the risks we observe on that angle. On the customer side of things, maybe KYC ID frauds. It is not common sometimes for customers to provide fake IDs, which may look very real. And, of course, also trying to look for mitigations around that. And of course, we also have issues of, social engineering. Somebody might call you or call a customer, try to, cheat them to be able to follow certain prompts on their phone to be able to, access their funds. And of course, like I mentioned, there's potential collision between many parties, and ultimately all these might also lead to, financial crime. So, but the next slide now highlights how the industry is mitigating such fraudulent activities. So let me start with the issue of perhaps mobile money fraud risks, either at the staff level, agent level, partner level, or customer level. So now on the part of, in terms of the operators have put in place safeguards to be able to detect fraud, be it through reporting mechanisms, automatic transaction, and suspicious activity monitoring. They have very sophisticated systems to be able to monitor customer behavior that may seem fraudulent and be able to mitigate very fast. There's also the issue of identity management, trying to be smart around how to confirm identity information that is provided from a KYC perspective, authentication and access. Also in many countries has been automated. We are seeing a lot of biometric technology now being used, at least from the authentication point of view. So we understand some countries may not have eKYC in place, and we cannot blame them for that, because putting eKYC infrastructures can be expensive for governments because it requires digitized IDs. But we are seeing innovation around authentication by providers in order to make that process easy for their staff identifying their customers. But of course, there's a lot of agent education, and I think Munir also mentioned that, trying to just empowering the agent to be able to mitigate some of these risks, how to identify genuine ID cards, trying to identify potential fraudsters and whatnot. And on the part of the customer, there are so many educational campaigns which are done either above the line or below the line, trying to educate customers on potential fraud incidences that could come their way. And this is also being done up to, even in many countries, up to the vernacular level, so that everybody who is able to access mobile money understands how this could come their way. Social media is also playing a critical role for customer education, because we understand that most customers also are now on social media, and they're able to also get these learnings from there. But of course, dispute resolution, whenever an issue has occurred, I think there are many, most all operators actually have very clear dispute resolution mechanisms to be able to ensure that the customer is protected, compensated, and the issue is resolved in an amicable manner. Now, on the part of money laundering, terrorism financing, and bribery, those are some of the risks as well that operators are prone to. But to mitigate this, of course, they have automatic transaction and suspicious activity monitoring with their systems. There are strict controls through Meka Checker. Some activities on the system for mobile money, for instance, have to be approved by 2 or 3 people before they're finalized, to ensure that the risk of fraud is reduced completely. And of course, adequate funding of the financial crime function to ensure that the financial crime experts who are employed to monitor this are adequately trained on that. There's also the issue of the system and cybersecurity risks. We are living in an increasingly digitized world. Everybody has to use an internet, requires internet access at some point, and of course, that calls for stringent security measures within the online space. Operators have invested a lot in firewalls and security softwares just to ensure that any cyber threat is detected early and mitigated very early as well. Access controls and permissions are also issued to the people who have access to sensitive platforms and systems within industry, within the industry and within the different operators, to ensure that nobody can just access such sensitive information. Of course, we have security credentials and security risk assessments are done, continually. And those are just but a few of the mitigations that have been put in place, by operators. But before I finish, I think it's also good for me just to mention the fact that, to mitigate fraud requires collaboration amongst all stakeholders. The digital financial space is increasingly very, integrated. A bank may be connected to a mobile money operator. A mobile money operator could be connected to an IMT provider. An IMT provider, could be connected to another third party. And also, this calls for a concerted effort for everybody to play their part. And you never know where the threat could come in. If a threat comes into the bank, it could lead and end up in the mobile money side of things. It could enter through an MFI, and that could also still result maybe getting into the bank. And of course, regulators also have a very clear mandate in ensuring that they support their licenses in mitigating this. I think the regulations are clear, and there are also other ways industry players and all stakeholders can work together. Things such as customer education, I think, is very important. Countries such as Nigeria are very key and big with customer education being driven by the regulator, educational campaigns, and of course, ensuring that there are redress mechanisms for the customer in place, so that when a customer is impacted, does he or she have a way of reporting this and getting help? So I think I'll end my presentation there, and Mohammed, and I guess back to you.
Great, thank you so much, Kennedy. Appreciate the content that was shared. That I think it's, as I said, it's a massive topic that the 1 hour session here doesn't do justice. I want to open up for anyone that may have questions. I don't have anything that I see on the chat room, but if you have a question that you would like to post on the chat, or if you can raise your hand using the raise hand little tool there. We can take a couple of questions before we have to sum up. Okay, so maybe Kennedy, what are just starting points for organizations that are dealing in the mobile money space, or just fintechs at large, for ensuring that they build their foundation to support anti-fraud mechanisms and highly secured transaction environment, at the same time stay aware of providing good customer experience? Either one of you guys can take that.
Yeah, I think I can start, and then I can give Munir the opportunity to respond to that. So I guess really it's a 360 approach, really, when you look at it, because we have the platform that is used to provide mobile money services. Of course, you have to ensure that the platform is safe. And like I mentioned earlier, there are safeguards which have been put in place to ensure that the platform is safe. And then, of course, ensuring that customers are aware about some of these threats, and they have redress mechanisms to be able to address such issues. Of course, having a customer hotline in place where issues such as this could be reported is very key. But then again, I think it's important to ensure that your staff are well trained when you're starting over. So I think training your staff is one of the prerequisites, even before launching a service, to ensure that everybody is aware about this. And everybody requires the training, not just the agent, not just the customer-facing staff, but rather everybody who is within the organization requires this kinds of training. But I think also, more importantly, and to be able to support the industry, there needs to be a clear set of guidelines for them to follow through. And it makes it easy for them to be able to tackle some of these issues. If the regulations are clear, I believe things will also be easy for operators. Of course, they are empowered and they have their own initiatives, such as the mobile money certification, which my colleague Munir used to lead when he was at the GSMA, where the industry comes together just proactively to ensure that mobile money is safeguarded against such risks. So that would be, my 2 cents on the same, but I believe my colleague would also be able to say, a little bit more on that.
Thank you, Kennedy. I think to just add more on that, one of the also first steps providers need to take is in establishing a fraud management policy, that would define their approach to anticipating, monitoring, assessing, and managing and controlling this fraud. Like we did talk about, they need to clearly spell out in terms of like the system that Kennedy did mention, the design and implementation of this one, the robust system, and also the transaction monitoring system that would be able to automatically identify this fraud. Also, they should put in place policies governing on employees, agents, third parties, and customers on how to reduce opportunities for fraud. Thirdly, they should highlight also communication or linkages with other stakeholders and also law enforcement agencies. We talk about law enforcement agencies, judiciary, telecommunications, the Telecommunications Commission, Identity Management Commission, and what have you, and also those that make in terms of decision, in terms of concern fraud within the organization. So putting out this policy, I think it's a great, like the foundation steps that would highlight and give a strong foundation for any DFS provider to tackle this and minimize this issue of fraud. Thank you.
Great, thank you so much, Munir, and thank you, Kennedy, for the very well-rounded discussion and presentation. Really appreciate the time that you have taken to put this together and share it with the group. And we look forward to hosting you guys in future sessions. On behalf of Shmool, thank you everyone for participating and taking time out of your day so you can hopefully enjoy this learning session. And we promise that we're going to keep providing you with the latest and the greatest in the field of digital financial services. Thank you very much and have a good day.